Topic of our webinar today is Work Opportunity Tax Credit. The short term for that is WOTC, if you've ever heard that before. So we want to talk about that, hear from Nick, just a little bit more about what that is and potentially how it could benefit you, your company, and then also how iSolved can play a role in just helping that happen. So Nick, I'm going to stop sharing my screen and let you take over from here. But yeah, we'll jump into WOTC.
Perfect. Well, I appreciate the introduction. As Cody mentioned, my name's Nick Weber. I'm a WOTC account manager here at iSolved. And basically what we're going to do today is just sort of roll through what the Work Opportunity Tax Credit Program is, kind of talk about some of the benefits to you and kind of what that would look like to help save you credits, tax credits on what you would owe to the IRS. So first thing we'll kind of mention is what is an employment tax credit? What is work opportunity tax credit, WOTC? So this is a federal program that allows you as a business to save or claim credits against some of the wages you pay to some of your employees. Basically, the way the program works is that as your employees are hired, they would be screened during the onboarding process. And essentially what it looks for is for employees who are receiving some type of federal assistance. Most frequently, this is going to be like food stamp recipients, TANF benefits. There's target groups for veterans. There are also some certain target groups that just based simply on where the employee lives. If they happen to live in a specific part of the country, they would be eligible to generate these credits. These credits then would be used against your general business liability. So you claim that as a direct credit rather than sorry, hit the button there. A direct credit rather than a deduction against what you would owe to the IRS. So, for example, let's say iSolved goes through the process and uncovers $5,000 in WOTC credits for you. If you typically would owe $10,000 to the IRS, these credits are a dollar for dollar reduction. So rather than owing $10,000, you would now only owe $5,000 to the IRS. So that's just a basic overview in a nutshell of what the WOTC program is. There are multiple target groups, like I said. Kind of going into some of those target groups that I mentioned, veterans, TANF, which is similar to SNAP, those designated community residents, those are the ones that I mentioned where they just happen to live in a certain part of the country. But there's 13 different target groups in general that iSolve screens for. So I mentioned it's a credit, not a deduction. Also with those credits, if we generate more credit than what you owe to the IRS, these credits can be carried forward for up to 20 years. So you can start to bank those credits if you start to see more and more, maybe more than you can use. And they carry with that corporation as well. So it's a nice way to kind of bank some savings that you would owe to the IRS typically. I also do want to mention that this program is for-profit businesses. Nonprofits are not eligible for the program, so that's just something to keep in mind to see if your company could take advantage of this program. So typical client profiles, if this would apply to you as a company, first, are you aware of it? Are you taking advantage of it? It's a way for iSolve to kind of streamline this process for you with the partnership of Payfluence, kind of adding that into your HTM suite of software. So definitely could be an eligible or a way to make this process easier for you. If you're not using it, do you typically hire employees who maybe are entry level or lower paying? Do you have higher turnover? This is one of those few softwares, or I should say few programs where if a company does have typically higher than normal turnover, it's a way for you to recoup some of those losses that you might see in bringing in new employees, retraining, things like that. And then is your company at least 50 employees? Typically, we like to see somewhere around at least 25 new hires a year. So it's just something for you to think about. Would this be a benefit to your company? Typical industries that we see that really succeed well in this would be call centers, convenience stores, the healthcare industry, hospitality industry, obviously fast food restaurants, chains, things like that. So just kind of a snapshot there of some of the different industries that this might apply well to. So let's take a look at how this works and kind of how the savings work out. So let's assume we have a 100-employee company that has 100% turnover. So we're basically estimating about 100 new hires that would come through annually for the business. On average, we see about 15% of all employees that are hired qualify for the WOTC program. And then on average, about $1,000 in credit per qualified employee. If you do the math out, you're looking at about 15 employees that might qualify for the tax credits. You add in that $1,000, that gets you about $15,000 in tax savings. So that is a conservative estimate. There are different max credit levels for each employee. Those range from $2,400 for the majority of the target groups, but there are some target groups that are a little more lucrative where you'd be looking at $9,000 in tax savings for that employee or $9,600 in tax savings. It all depends on the employee that is hired and kind of what federal assistance they're receiving. So just a little bit about iSolved. We've recouped over $84 million in tax credits for our different clients. We've been processing this program since 2003. Right now, we got a little over 2,000 tax credit clients across all of our book of clients that we work with, and we file in all 50 states. We also have direct contact with those states as far as if there are issues, questions, different types of things that pop up that we would need to reach out to. And then we're also part of a lobbying group called NEON that is influential in lobbying for WOTC. I know one of the questions that kind of comes up from here or there is, what is the status of WOTC? It has been put on hiatus in the past. So right now, WOTC is in place through 2025. And right now, they're looking to make that a permanent part of the tax code. That's sort of the next step and what the lobbying group is pushing for. Just to give you some behind the curtain details there on what's going on in the background with WOTC. So the technology advantage, the biggest part about this is that it is built fully into your onboarding product, the iSolved onboarding product. So for you and your team who are onboarding and hiring those employees, your process isn't going to change. We're basically just putting in additional questions that your employee answers. So that falls on the employee to go through, answer any questions to see if they're receiving any of these federal assistance programs. So for you and your team, you would just hire and onboard like you normally would. You would gain access to the employer dashboard. That's single sign-on from within the Payfluence instance, where you'd click on a link, takes you right into the WOTC dashboard. That's where you can review all your reports, your different invoices, employee forms, and just see what the status is of your employees. Currently, we're e-filing in over 40 states. It's almost 50. There's just a handful that still are a little behind the times in the processing path of it. Payroll, that's an integral part of the process in order to calculate the available credits for you. That is all done by iSolved. You and your teams would not need to provide any payroll information. With our partnership with Payfluence, we would have access to all of that in order to be able to calculate the credits that would come through. So again, for you and your folks, there's nothing you would need to do on that. And then again, as I mentioned, it's integrated directly into the iSolved onboarding product. This is just a quick snapshot of what that would look like within the AEE view. Basically, what happens is they add a little module, a WOTC module to that, and then it asks those employees a series of yes or no questions that they would skip through or go through by hitting the next button here. When this is added in, the questions are not mandatory. The reason for that is the program itself is not mandatory. You can't force an employee to answer these questions in order to complete the onboarding process. But the way that we set it up is it looks like it's part of a module, and the majority of employees aren't going to physically skip over a section or a questionnaire. They're going to go through and answer those questions for us. So it's a very easy way for them to go ahead and provide that information. So just a brief recap, every new hire completes the WOTC screening, which is then sent to iSolved. That's all done on the back end. There's no manual process or submission of forms that you or your teams would need to do. All forms are then tracked and reviewed by iSolved to determine that eligibility for the employee. We would also provide any additional documentation requests, so it's very low impact on your level of workload that you would see. Qualified forms then are sent to the appropriate states again by iSolved to receive a certificate. iSolved would then send monthly or weekly compliance reports depending on what kind of setup you were looking for with the data of those forms received, whether those employees were qualified or disqualified or potentially generated credits for you already. The determinations would then come to iSolved with confirmation of the approval or the denial by the state. And then at that point, that's when we calculate the credits based on the hours worked and the wages paid for those employees. We then process those credits each quarterly and deliver a credit summary to you. That way, if you do quarterly estimates for your taxes, you're able to use those. But then at the end of the year, you would also receive that year-end report that summarizes all the quarters you've been with us in that tax year, and that you would give to your tax preparer in order to claim those credits. So the credits themselves are not they're not on the payroll deductions or payroll taxes. This is something you would claim with your CPA when filing your corporate taxes at the end of the tax year.